Hello, this is Bennett Tchaikovsky, and welcome to more cash flow questions. This is going to be really focusing on more of a comprehensive example. This presentation is copyright 2008 to 2018 by Bennett Tchaikovsky. And if you want to reach me, I'm reachable at either one of the emails below. So let's take a look at the problem we're going to look at today, and this is for Saba Lian Inc. And here we have the balance sheet. And so what I've done a little bit differently on this one is I've included here an allowance for doubtful accounts. Also, we've got accumulated amortization. We have intellectual property. And we kind of go down here and just more fun stuff. We got a bond at a premium. And there we go. So we have this huge question here. And so before we go any further, what I'm going to do is I'm going to go ahead and pause the video while I get everything set up. So I'll see you in just a few moments. Okay, and we're back. And so what I've done here is I've created the skeleton for the statement of cash flows. And if this is giving you troubles, I want to really suggest that you go back and you view the earlier videos. So here we have the skeleton, and what's important about the skeleton is that at the end of the day, we know what our beginning cash balance is, we know what our ending cash balance is, and we know here that we had a $2 million increase in our cash. And so the whole purpose of the statement of cash flows is to figure out how did we get this $2 million. And again, looking at the balance sheet right here, cash increased from $500,000 to $2.5 million, or for a total of $2 million. Notice here, I've also have put in, sorry, as I'm realizing this right here, I made a little error. There we go. So what's different about this account or this question as opposed to the other problems? Well, here I've added allowance for doubtful accounts. That is a contra asset account. It reduces accounts receivable to the net, essentially to its net realizable value or to its net value, meaning what are we expecting to collect. And also over here, what else have I added? Intellectual property. And that's what we call patents, trademarks, copyrights. And we also have an accumulated amortization account for the intellectual property. And I also have treasury stock. Now notice here, treasury stock or shares that we've purchased, repurchased from on the open market. The way this works is that I'm going to debit treasury stock and I credit cash. This is what is known as a contra equity account. I would want to refer you to my owner's equity videos, and you can find out a lot more information about treasury stock there. Okay, so now as always, what we do with these types of questions is with our cash flows is we're going to deal with the additional information first. So let's go here and take a look. So we have here, the first thing it tells us is that SLI had a net loss of $695,000. When I'm dealing with a net loss, we know that net income goes here, but my net loss is going to show as a decrease to my retained earnings. So here I'm going to be debiting retained earnings for the amount of the net loss. My rule is whatever I do to my asset account or my T account here, I need to do the opposite to cash. So in the operating section, I'm going to show here a credit to cash for $695 or for the amount of the net loss. So that's the first thing we're going to do, and that is from the additional information number 1. On March 15th, we sold equipment. So when we have an equipment sale, so here for transaction 2, loss, accumulated depreciation, cash, equipment, and then a gain. So here, the way I'm going to treat this kind of question is I'm going to go ahead and put in the information that I know. It was equipment that it cost $100,000. And if you would like a more in-depth explanation in terms of what we're doing, I want to refer you to cash flow video number 4. Okay. So right here, I'm crediting equipment for $100,000, and it had accumulated depreciation of $20,000, and I sold it for $10,000 cash. So that means the equipment was worth 80 grand, or it had a net book value of 80,000, or 100,000 minus 20, or 80. I sold it for 10,000 cash, so I had a loss of $70,000. And if you need more help with this one, please go back and refer to my how do we go through and record gains or losses on disposals. My rule here is when I have the sale of equipment, I'm going to go ahead and put it directly into the T accounts. The loss goes into operating as a debit, and cash goes into investing as a debit. And then I similarly post the accumulated depreciation and then the equipment amounts as well. So here I have a loss on sale of equipment of $70,000. And we'll highlight that in green. I have proceeds from equipment sale of $10,000. And I'm also going to highlight this in green. And then I'm going to go over here to accumulated depreciation on equipment. This was a total of $20,000. Uh-oh. And then here my equipment account, because I sold equipment that cost me $100,000. I'm going to credit equipment here for 100. And there you go. So again, my rule is when I have an equipment sale, I'm going to do this journal entry, and then I'm going to post it directly into the T accounts. Debit the loss in operating, debit to accumulated depreciation, debit to cash in investing, and then a credit to equipment for 100,000. Okay. So I sold shares of common stock for 101.8 million shares. And so, excuse me, I sold common stock for 1.8 million cash. So the journal entry that I would be doing for this one is I would be debiting cash for 1.8 million. And then in this case here, I'm going to credit additional paid in capital common stock for 1.8 million. Notice here why I'm doing this is because the common stock at par is not changing. Rather, the additional paid in capital common stock is. So the way I do this one is I'm going to show, let's see here, I'm going to go ahead and credit basically additional paid in capital common stock for the 1.8 million. And I'm going to then debit cash under financing called a sale of stock for 1.8 million. So again, this is what I'm going through and doing. I'm doing the opposite to cash, but you can also do this here as a journal entry. It's completely up to you. So on January 30th, 2021, SLI acquired a patent, or known as intellectual property, valued at $400,000 by issuing a bond payable for $400,000. So let's see what the journal entry is for this. That sounds not very intellectual. So here I'm debiting intellectual property, or the patent, for $400,000, and I'm crediting bonds payable. This is what we call a non-cash transaction. When I have a non-cash transaction, what do? I do two things. The first thing I'm going to go through and do is post it into the T accounts. So here, my intellectual property is going to be debited for $400,000. So I'm debiting intellectual property for $400,000, and then I'm going to be crediting bonds payable right here for $400,000. And again, this is what we're calling a non-cash transaction. And so what I have to do is I have to put it into the T accounts, but it doesn't impact cash. The other thing I'm going to need to do is below the statement of cash flows, my skeleton that I have created earlier here for Saba Lian, I need to go through and I need to write out what was the non-cash transaction. And so here, that's it. Okay. So that's what I would do with a non-cash transaction. Lastly, on December 30th, I issued, I didn't update this for the new order. So on December 30th, 2021, Saba Lian Inc. issued bonds with a stated rate of 5% and a face value of 1.1 million that raised 1,150,000 in total proceeds. So what I have here is I'm receiving cash of 1,150,000, and my face value of my bond is 1.1 million. So to balance this here, I need a credit of 50,000. When my cash proceeds exceed the face value of the bonds payable, what this means is we have a premium on bonds payable situation. So what I'm going to do here with my additional information journal entry is I'm going to go ahead and post this directly into the T accounts. The cash is going to go here for proceeds from sale of bond. This will be 1,150,000. The next thing I'm going to go through and do here is I'm going to put the premium and the bond payables into their respective T accounts for 1,100,000 and then 50,000. Now, I've had this discussion before on the prior video, and I thought it was a little bit too circular for my taste. You want to be showing when you're doing a sale of a bond, we do not want to be going through and showing like this. I don't want to say bonds payable and then premium on bonds payable. And this would here, I would be doing the opposite to cash, or 1,100,000, opposite to cash, or 50,000. And the reason is I don't want to show it this way because when I'm doing this on the statement of cash flows, I don't really care about the premium and then the bond. What I care about is how much cash should I raise as a result of issuing the bonds. So there we go. Okay, lost forever in Google Sheet land. Okay. Now what I'm going to go through and do is once I've dealt with the additional information, what I now go through and do is I'm going to be looking at the changes in the various different accounts. So what I say here is my accounts receivable went from 400 to 300,000. What do I need to do to balance the account? Well, I need a credit here for 100,000. So if I'm crediting receivables, I'm going to be debiting cash. I'm going to call this by what's happening here with my receivables. Receivables, which is an asset, increases with a debit and decreases with a debit. My accounts receivable is decreasing. So this is going to be a decrease in accounts receivable. Okay, let's get to the next one. Allowance for doubtful accounts. This is fun. When I look at the allowance for doubtful accounts, I have here a change of $20,000. Excuse me, I need its base, 15,000 opening, 35,000 ending. To balance this, what I need to have here is a $20,000 credit. So I do the opposite to cash, or show here as a debit. But when I'm recording this, what's very important to remember is that I don't say this is an increase to the allowance for doubtful accounts. Rather, what this is going to be is what we call bad debt expense. So this is something similar to depreciation expense when we're looking at the increase in accumulated depreciation. So what we're going to do right here is I'm going to have this bad debt expense, 20,000, right? So right over here, we're going to call this bad debt expense. So when we have an allowance for doubtful accounts, that's how we treat it. Inventory here had an increase of 150,000. So what I'm going to do now is do the opposite to cash, or for this 150. And I describe this in terms of what's happening with the inventory account. This is going to be an increase in inventory. Okay. Prepaid expenses. To balance the T account, I need a credit of 25,000. I do the opposite to cash, or I'm going to debit this here for 25,000. And what's happening to prepaid expenses? Well, it's decreasing. So this is going to be a decrease in prepaid expenses. Okay, so the next one here is short-term investments. To get from 100 to 150, I need an increase here of 50,000. So we're going to do the opposite to cash, but it's going to go in the investing section. I'm going to say purchase of short-term investments. I'm making the assumption here that when I'm seeing these changes here in land and investments, that I'm selling these at cost. If I had other gains involved, different question, different class. So over here for land, I have an increase of 100,000. So what I do to cash, I do the opposite, or I'm going to credit cash. I'm going to call this a purchase of land. All right, equipment. So this is why we have to deal with the additional information first. I had an opening balance of 600. I sold 100,000 worth of equipment. So to balance this equation, I need here 250,000. So we need here 250. What do I do? Well, let's find a brand new color for us to use. There we go. Probably have already used it. And so right over here, I'm going to do the opposite to cash. I'm going to call this a purchase of equipment for 250,000. Now, when it comes to accumulated depreciation on the equipment, to balance the equation, I need over here a credit of $70,000. So I need a credit here of 70. 200 plus 70 minus 20 is 250. So what do I do to cash? Well, what I'm going to be doing to cash is I do the opposite to cash. And so right here under, I'm going to make that a little bit darker. There we go. What I do is I'm going to debit cash, and remember, for accumulated depreciation, I'm not calling this an increase in accumulated depreciation equipment. This is just going to be called depreciation expense. Okay. Intellectual property, this is balanced, so we're good to go. Accumulated amortization intellectual property. What is accumulated amortization? It's like accumulated depreciation, but for patents and other intellectual property. So here I need to balance the equation. I need here a credit of $20,000. I do the opposite to cash. And so right over here, I'm going to call this 20,000. I do not call it an increase in accumulated amortization. I'm going to call this amortization expense. There you go. Okay. Accounts payable, to balance this, I need a $250,000 debit. And so I'm going to basically, I need a $250,000 credit. Over here, 250. This is an increase in accounts payable. Payables increase with credits. Accrued liabilities. Over here, I need a credit to accrued liabilities, and accrued liabilities is decreasing. Okay, after accrued liabilities, I'm now going to unearned revenue. How do I get from 185 to 215? I'm going to need a credit of 30,000. So here I do the opposite to cash, and this is going to be an increase in unearned revenue for 30,000. Bonds payable is already balanced, so I'm good to go on that. Premium on bonds payable is good to go. It's balanced. I don't need to do anything else. Common stock at par. So here we have unearned revenue, bonds payable, this account's balance, premium on bonds payable, common stock at par, additional paid-in capital common stock. These are all balanced. Now we get to treasury stock. Treasury stock happens when a company repurchases its own shares. So here to balance this, I need a debit of 100,000 at an opening balance of 0. So here I need a debit to treasury stock. Here I do the opposite to cash, or here I'm going to be crediting in my financing section of the cash, and I'm going to say here, purchase of treasury stock. So when I repurchase my shares, it goes into the financing section. Remember our rule on financing. Anything related to buying or selling our own shares goes into financing. Lastly, I have here my retained earnings. Is this account balance? Well, $1,015,000 minus the loss gives us $320,000. So right over here, I've accounted for all the various transactions. So now what I need to do is I need to add everything up, and I'm going to hope that the total amount of all these transactions equals up to my total change in cash, which in this case is going to be $2 million. And let's go back over here and look. And right over here, my total change in cash is $2 million. So for Saba Lian, they had an opening and then an ending of 2.5 million. And now we need to basically make sure that this total amount here is equaling up. So from operating, I had total debits of 585. I had total credits of $1,045,000. So my net cash used in operating activities is going to be $1,045,000 minus the 585, or $460,000. When I come down to investing activities, I had total debits of $10,000, total credits of $400,000. So my net cash used in investing activities is going to be 390,000, or excuse me, it's going to be 390. And again, as I go through and I look at this, if this number is a credit, it means it's going to show up as a negative amount on the statement of cash flows. Therefore, if it's a credit, it's used in. If it's a debit, it's going to be provided by. And here I've got total cash proceeds of, over here, $2,950,000. And then I had the repurchase of stock. So this is going to be net cash provided by financing activities, or $2,850,000. Okay. So when I look at this, and again, you do not have to go through and do this part here, but if I take $2,850,000 and I subtract 390 and then I subtract 460, what do I get? Well, 2,850,000 minus 390 minus 460 is $2 million. So I know I have done this part of the question correctly. So now what I'm going to do is I'm going to go ahead and set up the next part of this, which is actually going through and doing the statement. So I'll see you back here in just a second. Okay, so we're back. And when I'm doing my actual statement, if I have gone through and if I have done my job well for all of this over here, this should be relatively easy to do. So I had a net loss. My net loss was negative 695,000. Remember, when we are going through and doing this part over here, what I have to remember, if something is showing up as a debit, it's a positive amount. If it's a credit, it's showing up as a negative amount. So here, I've got my loss on sale of equipment, decrease in AR, and we're going to kind of go through here and bust these through. My loss on sale of equipment is a debit, so it's going to be a positive 70. My decrease in AR is 100,000. My bad debt expense is a positive 20,000. And my increase in inventory, 150, decrease in prepaid expense. My depreciation expense, my amortization expense, my increase in accounts payable. I had a decrease in accrued liabilities, and then an increase in unearned revenue. So my net cash used in operating activities is going to be the sum of all these values here, or it should be 460,000. Okay, for investing activities, I had here proceeds from the equipment sale, purchase of short-term investments, and then land. So because this is a debit, it's going to show up as a positive amount. Here, I'm going to be showing this over here as a credit. This here will be also be a credit. And then this also will be a credit here. So my net cash used in investing activities is going to be 390,000. Again, it's what I computed to be over here. Lastly, for my financing activities, I have sale of stock, proceeds from the sale of a bond, purchase of treasury stock. So right here, my proceeds from the sale of the stock, 1.8 million, bond issuance, 1,150,000. I bought back shares because it's a credit. It's going to be 100,000 negative. So my net cash provided by financing activities is going to be $2,850,000. So before my net increase in cash, I was saying my beginning minus my ending, but here we can also say it's equal to 2,850,000 minus 390,000 minus 460,000. So my net increase in cash plus my beginning cash balance gives me my ending cash balance of 2.5 million. Notice here on the bottom of my statement, because I did this earlier on in the question, I had a non-cash transaction. When, according to the additional information, when we had over here we acquired a patent valued at $400,000 by issuing a bond payable for $400,000. We essentially over here had this $400,000 going through. This is non-cash. We put it into the T accounts, and it also gets disclosed on the statement of cash flows. So this has been Accounting with Tchaikovsky. Hope you're going to have a great day and a better tomorrow. And please like and subscribe, and I will see you on the next video. Thank you so much.